So what I want to do first is I've got gold loaded up here on the 10 minutes and it's on the default setting. So I want to go through right from the beginning in trying to figure out a good optimization, right? I mean, I haven't traded gold for a long time. Personally, it's just copper and oil for me. It would be too easy for me to do copper and oil, yeah, because I trade that every day. So I've chosen gold purposely so we can figure out what's going on with it, how to optimize it and all that. So I'm going to go through that optimization process with gold. And this would be the same for anything. So what I'm going to ask you to do now is just take off your videos, because obviously this is recorded and we want the full screen to be able to be seen. Take my video off as well. Okay, we're good. Right. So again, gold, I've loaded up the range breakout version 3.2 on this. So when I right click on the chart and click strategies, this will be the basic standard default layout that you get. Okay. So before you do anything, make sure you're on sim and not on your live account. I would say a lot of the better times to actually do these optimizations are during the weekend when the markets aren't closed, because it can be quite intense on your machine, you know, your memory, the process and things like that. When the markets are closed, the data's still there, but there's not a crap ton of data flying around during the trading day. So if you're going to be, this is the sort of Sunday afternoon, Sunday morning, whatever, it's the sort of process you're going to do when the markets are closed or very quiet. Otherwise, you are just going to put too much load on your computer or VPS if you're using a VPS. So one of the things I'd also say is if you're using a VPS for trading, try and do the optimizations on your computer, because it will most likely be more powerful. So if I just go just briefly and just cancel that sec. What I want to do is I'm just going to go to Task Manager, because what I want to do is monitor as we go along what actually it does. Okay. So right now, I've got NinjaTrader open. I've got a couple of Googles and blah blah blah. And I got Discord on there. But I'm using 42% of my memory already, okay? And I've got quite a bit of memory in there. So the zoom's taken up quite a bit. Trading view, I can actually close that down. Let's close trading view down. Where are we? Okay, that's taken that down a bit. Microsoft Edge, why is that running? Oh, that's why. Let's take that down. So again, it might be worth just cleaning up some of the background stuff that's going off, that's actually taking some of the, but you can see here that NinjaTrader is pretty heavy on there. We've not even started doing any optimization yet. The markets aren't even running. And this is a new computer. This is the 12th gen i7 blah blah blah. You know, it's a good computer, but it's still quite heavy. I will get the heavy usage with the zoom here. It's just one of those things I have to put up with. I am actually going to close Discord and WhatsApp down as well, just so you get the maximum there. Okay. Right. So again, if I right click on strategies, we have the basics there. This is the default setting. So default, we've got opening trade. So that's where we get the bias, and we want to trade in the direction of the bias. So it's green, we want to be looking for the long. If it's red, it'll take the short. Straddle is also checked in default, so uncheck that for now. Reversals is not checked. and then continuation trade is checked. So what I want to do to begin with is I want to set up the standard range breakout. So when we get a bias, we want to trade in the direction of the bias. But then I also want to look at good times for continuation. So you can either have the opening trade with continuation, the straddle with continuation, or the reversals with continuation. You can't have any of those other three on the same chart. Okay, so you can't have opening trade and straddle on the same chart. If you open up another chart and put straddle on there, that's fine. You just can't have it on the same chart because you've got conflicting strategies there. So the first thing I've done is obviously all I've done is taken off straddle. I've got opening trade and I've got reversal trade. Now gold responds pretty well to the European Open, but in default that's 205. That should be 210 because I'm on the 10-minute time frame. So the European Gold Pit Open is 8 a.m. Europe time, which is 2 a.m. in the US EST. Remember, with NinjaTrade, it's a little funny. The time on here is the time when the candle closes. So remember, we're wanting to define that range for that first 10 minutes when the gold pit opens. So it closes at 210. That's when we're on. We're not going to have London on there. We're not going to have, we want New York gold, but again, that's got to be 8:30 because 8:20 is the New York gold pit open and 8:30 is where we see that first 10-minute candle close. So we've got those two sessions that we want to try and trade. Now, when we start to go through this, we might see that one session is better than the other. The other one sort of conflicts later on with whatever. So we're gonna look at that as we go along. So at the moment, we have the max profit, max loss, and everything's all disabled. The trading session mode is all disabled as well as default. The only thing we're going to do to begin with is just play around with those max ranges, okay? So the maximum number of bars after opening is set to default to 10. That's no good for me. That if we get a bullish range defined, okay, I want that to go in on the next candle. If not the candle after, no more than that. We need a bullish bias, the range is defined, and we need it to break out, we need it to go. We don't want it to hang around 5 or 10 bars, okay? So we're at max bars after opening. I'm going to put that really tight at 2. The max range, so that's the maximum range. Now, remember, that's your risk, really. So if you've got a max range of 100 ticks, that's $1,000 risk. That's going to be way too much. What we're looking for is a small opening range, smallish, that's almost like a squeeze, and it breaks out and goes. So what I'm going to do first is put that around about 25 ticks. So remember, per one contract, that's $250 risk plus the entry and the exit. So we're going to just go one contract for now. So change that to 1. And stop market is what we need, really. But again, we can play with those. So the options we've got in here, especially the MIT, market if touched, sometimes that can be quite a useful type of order. But standard is stop market. So the entry offset is 1 tick. So if we're going to go long, the bias is green. If it breaks the high of that range, and then we go that 1 tick, we're in. Okay, you want to be more conservative, you can put that to 2, okay? But I'm going to put that at 1. The stop loss offset, so that now is where, if we're going long, the stop loss is below that, the low of the range. I always have that 2, there's a little bit of leeway there. So the next thing is all of these stop loss offsets, number of ticks. So if we're only trading one contract, a lot of the times we'd like a runner, but we need to understand where we're going to make it risk free. How many ticks is it going to go through, for example? before we make it risk-free. And if it does run, how are we going to adjust the stops to lock in profit? Now, not forgetting when we get these ranges, sometimes we bounce up, come back down, and it goes again. So we need to make sure it's running quite well. And we won't know that until we actually start to do that optimization. So I'm going to put 25 ticks. It's probably, if I'm going to go 20. Until it goes through 20 ticks, I am not going to adjust the stop. So we've got to be 20 ticks in profit before we adjust the stop. The offset is going to be 2. Remember, the entry offset was 1. So we need to be above that to make sure we're risk-free. So when it goes through 20 ticks, I'm risk-free. If it comes back against me, I've lost no money. The next one is important to me is I want to start to lock in profit. And we have to start somewhere. So I always start with doubling that initial one and then putting just 10 ticks in, okay? So even though I'm doubling that 20, I'm not, I'm gone 10 ticks. The next one, I'm looking for a runner. I don't know what the average range of the runner is on gold at the moment. It could be only 50 ticks. I don't know. So what I'm going to do is just add another 20 and go 60. But this time I'm going to put 30 as my trading stop. So the exit mode for me is if I just want targets, I'll leave it as it is. But for me, I like the confirmation. So this uses the manager. So when the manager, if we're going to go long and the manager ribbon's already green, it will defer to that confirmation strategy. As long as that ribbon remains green, it will stay in the trade. It will adjust those stops as we just said there. If we want to go target, however, you've got to set a sensible target. Now, one thing you must do though on these if you go target mode, you see here, because we started with 3 quantity for the actual order, 1, 2, 3 contracts there. So you're going to have to change 2 of those to 0, okay? And then you still need to put a target in, because if that ribbon is not green and we're going long, it will default to target. So if, for example, here my stop loss trigger is 60, I'm going to put initial target there of say 100. Okay, that might be too big for gold at this moment in time. If we don't see any of those hit, we can adjust when we are actually looking at the chart. So if we don't get a confirmation, defaults to target. If it started to go through the target, once it goes through 20 ticks, puts the stop at 2. Goes through 40, puts the stop at 10, goes through 60, puts the stop at 30, hits 100, takes the profit, in theory. Okay, you've got to start somewhere. Now we go down to the continuation trade. Again, max range is very important. Let's leave that at 25, not 215, 25. Just make sure it's the same. Yeah, okay. Now, when we're doing these continuation trades and we're looking at them visually, we may actually see that 25 is too much or not enough, and we can start to adjust that specific sort of risk, the range size there. We're going to go for 1 quantity on there, but again, if you wanted to trade, if we found that the continuation trades were a lot higher probability than the initial range breakout, you might want to go 2 contracts. The option is there for you. Stop market again, entry offset 1, stop offset 2. So we can do confirmation here on here, but again, we don't know when we're looking at this last 30 days, we don't know what it's going to be. So I'm going to look at the same sort of setup where we go through 20 and I put it at 2. We go through 40 and then put it at 10. We go through 60, and put it at 30. And then again, if we're not confirmation, we need to make sure that these 2 there, we've only got 1 contract and we're going to go 100. So we've put the initial criteria into that opening trade and the continuation trade. We've got the sessions, we've done that already, and then we're disabled on the max profit, max loss, and everything else like that. That should really come in later. So we can click apply, and then we can go back to the top and we can activate this and see what's going on. Now, one caveat with NinjaTrader and the reports that they give. Now, sometimes it just doesn't, it's not as accurate as you'd like it to be, okay? So I'm going to try and find an instance where it's not accurate. So, okay, so first of all, I'm just going to do a visual check. Yeah, I can see that the European and the gold pit opens good, that's fine. Now, I can see here, this was a continuation trade, so the green was above the blue, yeah? And then when it crossed, that's when it took the profit. Happy, that's fine, that's where we're going. That seems to be the right situation there. Yeah, again here, this was a reversal. And we'll build the picture of gold, because reversals only work on data on certain days. But this day, this would have been a great trade, but you'd need to put that on a different chart set. We'll look back a little bit more. Okay. So here, this is an example. So we got a break even there. So we got the New York Gold Pit Open was yellow, so we didn't get a trade. But what we did get is a continuation trade through the European range. Okay, we got the trigger. It came back down. It came down, but what it didn't do was adjust the stops as far as the back testing is concerned. So one of the things we need to do when we're looking at this is discount. You know, that's basically saying that was a break even. But what was the move? Okay, what was the move? I need to just put my crosshairs on because. Okay, so the entry was 13.3. Okay, we said at 20 ticks it would go to break even, didn't we? So 13.3. 20 ticks, 2 points, 211.3 is here. So on the back test, it didn't adjust the stop, but we know in reality that's what we've set and that's what would have happened. So although that's a break even now, yes, that was a break even trade. So it's just about understanding the visuals. So we go to the next one. This enters on that second candle, fantastic, and it was a loser. Okay, when was the entry? 15.4. What was the high there? 16.9. So that's right. It didn't take it that first initial stop loss to break even. We can learn from that. If that happens again when we're doing our visual inspection, we can perhaps adjust that to say 15 and see if we can get that a little bit better. The return trade was fantastic. Remember, the continuation trade works if we go down below, comes back up, it's green, it goes in, and we got an exit. Now, this exit is incorrect as far as we're concerned. This is where, no, sorry, it is correct. We can see here this confirmation, actually, the EMA just actually on this red candle starting to move down, it did cross. That did take some profit and basically wiped out that loss from there. So again, that is right because we can see here the confirmation. The EMA's just crossed there. I mean, sod's law, another day that would have continued to go. So visually, everything seems to be working okay. No orders there, that's good. Again, the European opening range here was red. The order would have been on, but it didn't take us in. It was cancelled. So it's also understanding that everything's working on that sort of score. So here again, we get the New York Gold Pit Open. we get the short, go in, and then we stop there. So this was a target that was hit purely because that wasn't a confirmation type trade. So that was a it was a decent trade. I actually think that was a trailing stop. So if we take that is 2313, 28282, 282. Bit slippage, that's 30 ticks. Yeah, okay. So that was one of the trailing stops that was triggered there. That was a break even. That looks okay. Not a bad bit of data set here. Lost there. But again, when we start to understand the best times of day for these continuation trades, we might find that this is generally a losing type of time of the day. We got a loser on this opening range, and then the continuation made us a little better there. But again, we had a little sort of break-even trade there. So it might be that we have to adjust the way that we adjust those stops or targets on perhaps be more aggressive on that continuation type trade. Oof, that's a big move there. So again, this one, look, 1, 2, 3, 4 candles just to tip across. That's an unusual circumstance. If we see that happen more than 2 or 3 times in this 30-day data set, we may decide to actually adjust that minimum 2 to maybe 4. Does that affect the performance report? So here we have a short entry at this point. This is quite difficult to see because we've got 2. We've got the European, and that is the short entry 12 there. I've got to zoom in here, guys. I need to understand what's going on. So this vertical line is the short order. The next candle took it in at 95 dead, and we went down to 94. So it's only 10 ticks before it reversed on us. Okay. The range size here was 95, 10, was 20 ticks. Okay. But just bear that in mind. Again, if you've got a notepad, take notes as we're looking and looking at the behavior. The performance report is good, and we will do some work with that to actually get things better. I always like to look at the trades. Again, we got this sort of 10:40 time when we do get a loss on that continuation type trade. So this is telling me there's a certain time of day when that's not working. Our opening range trade was reasonably good. We got to that first target where we adjusted that stop, so there was profit taken there. That was a nice small range. That was a nice trade on the continuation on this point here in the evening. Really, really good. But the continuation earlier on was not so good. That was a break even. We've got a pretty good data set here. Continuation trade here coming through the European pit open. This was the continuation signal, the vertical line here. A few candles later, 2 candles later, we got in. Then we went to the New York gold pit open, and stops were adjusted as we got that big move up, and then there. So it won't take an order because we're already in from that continuation trade. European Open, another winner. It's looking pretty good on gold right now. There's some adjustments we need to make, I think. That entry was 2009.8. Low was That's 15, 16 ticks. Just too big. Wow, no big ranges. Too big a range, too big a range. Again, around that 1500, that was a loser on that confirmation. We'll find that time frame in that. Okay, right. So I've gone all the way to that 30 days. Just check on the data series. We're 30 days on this 10-minute. Okay, so I've not even put the performance report up right now. All I've done is taken a mental note or some written notes on that performance of every trade. Was it true? Was it the back testing actually giving us a false positive or a false negative? There's one or two, but not many. I can see the continuation trade at certain times of the day is not good, but on others it's good. So let's just pull up now the strategy performance report. Okay, so profit factor of 1.18 with no optimization. Not bad. Okay, what I tend to do here is I've got a little bit of software. I can actually just take a screenshot of that. Two ways to do this. You can take a screenshot like this, or if you right click on here, export, okay, and we're going to call it GC10 min iteration 1, okay. Click save. It'll open up the spreadsheet on your computer. I'll bring that over from another screen. So you've got the data there to compare. We can see you know, the profit factor, the max drawdown, you know, that comes on the long trades rather than the short trades. And you know, there's 23 trades in that 30 days, but the win rate obviously is very poor. So what we've got is a start point. The next thing to do is to look at the analysis and drill down. Is first of all, is there a day of the week that looks particularly bad? Wednesdays and Fridays at the moment looks particularly bad, so we probably wouldn't trade those days. But then we just go back and look at hour of the day first. We can see again, just from that visual check that we made, there were certain times of the day where those continuation trades, because obviously these 5 and 6 a.m. they're continuation trades. This 10 a.m. slot, you know, this sort of slot here is pretty poor. So what I'd like to do first is just not take off any days right now, because we just probably had lots of crappy trades during this time on a Friday, and it's made Friday look bad. So the first thing I want to do is just look at all days, and we're going to be looking at the 4 a.m. slot's not a massive winner there, so I'm probably going to not even do that, because there could be more risk. So what I'm going to do first is I'm just going to open up my notepad here. And I'm probably going to be looking for, let's go half hour of the day a second. Okay, so I mean, this is a really big monster area here, and at this point here at 9:30 p.m. So I'm going to go for an 8:30 a.m. I'm just going to put it at 8:25 just before the thing there. So 8:20. I'm going to put it 8:20 start until 9:30. And then we're going to reopen it at, say, 11:15 a.m. until 12 p.m. I like the one at the end of the day there. That's pretty good. So that was a 9:30 p.m. So we're going to probably do a 9:20 p.m. to 10 p.m. Okay, so just 3 time slots for now. And that's the first thing we're going to do, is just to take away those losing trades first. Then we're going to obviously look at adjusting a few other things. So the first thing to do is got to go right click on strategies. disable them so I can go in there. And now I want to scroll all the way down. I want to look at all days, okay? And I'm going to put my 3 sessions in there. I'm going to go 8:20 a.m. And that goes to 9:30 a.m. So I'm going to put that at 9:25 before the market opens. Don't want any trades going in just before then, do we? So 9:20 will be good. And I'm going to change that to AM. Not going to flatten at the end of the session because if you get a run, I want it to run. I want it 11:15 a.m. So there's no quick way of doing this, guys. It would be great. There's no true AI in trading. Anybody tells you otherwise, they're lying. When you're building an automated strategy builder, you will find nothing as more, as many tools as this on the market anywhere. Okay. The problem is the more filters you've got, the more time it takes to build through there and start going through them. So we've built this monster, but it takes time to learn and it takes time to optimize and get that process working. But once you've done it a few times, 2-3 months, it goes really fast. So, and then session 3, we said 9:20 p.m. to 10 p.m. Okay, so it could be bad, it could be worse. I don't know. I've got a starting point here. I've made those changes to that time of the day. I've got my spreadsheet open on the other screen to see what's going off. So the first thing I'm going to do is I'm going to right click on the strategy performance report, and I'm going to look at those real-time historical data. Ooh, profit factor all of a sudden is 35.26. That's gone up way too much. Total number of trades 3. This is why. Okay, we haven't got enough trades in there. So at first sight, that looks amazing, yeah, but that we've narrowed it down too far. And again, if you're conservative and you only want to do those, that's fine. I'm just going to export that to GC 10 min iteration 1.5 because I'm not liking that one. I'm going to have to be a little bit more. Okay, so we've gone from 23 trades to 3 trades. Yeah, so it's not perfect, so we've got to find where we are missing. So the grey at the bottom, where there's no grey, is where the opportunity is to trade. Yeah. You see, this was one of the big winners that gives us that record. But it may be that we see like this is a straddle trade because that's yellow. Okay, so we may then decide that actually what we are doing right now for this type of trade setup is correct. We need to open another chart and just run the straddles. Okay, so for me at the moment, I can see one good straddle there, which was a big winner. We got a nice move up on this one. That's good. I'm just looking here. See, that was a straddle, but I think that was a really big range. It was, so that wasn't a trade. This was a straddle trade. Could have been a loser, to be honest, because it did go up, then come back down again. Not overly convinced at the moment, but we'll see. I'm just going to go back, do the visuals again. So that's one good straddle. That's a reversal. So again, that's a different chart set, and we're going to be looking for reversal. So this, I need to put my data box. So that was the 12th of April, okay? So again, when we're back testing, we need to then check out what went off on the 12th of April, what day of the week it was, what data it was, because that was probably a Thursday on the employment data. Okay. If anybody could just quickly look at my calendar. It's not on that one.
Was that the inflation news that came out on Wednesday?
I think it was, yeah. Just going to check my calendar a second. So the 12th was a Wednesday, yeah. So this is a once a month issue, but again, I think I played that. I basically gave you an update as I played that with a trial with 6E. But we know, so this is the notes we're going to be taking now, is that the problem with, this is why I say to the guys on the apprenticeship, you've got to choose one instrument to trade. Become very, very familiar, intimate even, with that particular thing. Because what we're going to do in a minute is we're going to open another chart set just for that one Wednesday a month for a straddle, for a reversal. Yeah, okay. So we know in our calendar, we're just going to activate that particular chart set for that auto trade on that Wednesday for inflation once a month. Yeah. So down the bottom here for GC, you could have 4 or 5 different chart sets for the auto trader for the range breakout. One with that opening range, one for data plays for inflation, one for data plays on Thursdays for the employment data, and so on and so forth. So we know, for example, this was a fantastic reversal trade on data. Yeah, once a month it happens, but we do need to have that in our arsenal. I'm just going to move GC across here a second, all the way across. So again, this is where these visual checks really, really come in. So we did have a reversal on this day. This day was also the European on the 12th of the 4th. Okay, we had a reversal on that day. So we were green here and it reversed down. So one of the things we'd look at here, if we were trading there, is there European data that comes out that made that happen? If not, was it a standard reversal? Right, leave it. We're not interested in trading. So again, as you can see at the moment, in grey, we're not actually trading any of these European opens, okay? So we can say the European opens, if we do straddles, at the moment looks a better bet than actually doing the normal range breakout. So again, that's another observation. So we got the monthly inflation data on a Wednesday. Okay, and then we have the European data is probably better for the straddle. Okay, just making lots of scribbly notes. All right, so we're back to where we were there. That was a break even. That was a New York gold. But it was actually the continuation that we got there was a break even. Nothing we could have done there. The continuation coming back up was pretty good. I'm just wondering if we can if we actually put that continuation from about 10 a.m. It might just adjust that 10 a.m. that later slot. Okay, but again, it's about the size of the range as well. We've got a European open there. It didn't really go, came back down again. So again, filtering out that is probably the sensible thing to do there. So I'm looking for things that happen, breakouts that happen where we've got grey, where it's not trading at the moment. I can understand why, you know, this just was a massive move through. There was no setup there. This was a huge range, nothing going off there at all for us. This was a winner chicken dinner. This was one out of 3 winners. Can we make that better if that happens again? What day was that though? That was the 6th of April. So the 6th of April, that is interesting because there was a massive spike here. Bear with me a second. I'm going to have to put TradingView back on because I just want to check the economic calendar. Canadian unemployment rates. Yes, that's what did it. Okay, so remember the apprentices anyway, remember the correlations section that we did. The Canadian dollars, one of those correlations, one of those reactions for gold. A lot of gold comes out of Canada, and that Canadian jobs data, that US dollar CAD reaction is also going to react there. So that's something else to remember when you're doing that, when you're working on these strategies, understanding when those data points are. Okay. Yeah, also jobless claims for US. So yeah, that was a data play that went in our favor there. Europe again, this was yellow. Straddle would have worked out there again. I'm thinking straddle for Europe open is probably a very sensible strategy here. Again, that would have been okay. I think we need to be tight on the straddle, have targets, but we're going to probably set those up. New York gold again. 1, 2, 3, 4 candles. 1, 2, 3, 4. It's before it actually flies. Okay. Interestingly, what I'm going to do now is I'm just going to change one thing. Okay, we have to change one thing at a time. It's very boring, but we need to do it. So what I'm going to do is I'm going to change it from 2 to 5 to see if we get any more trades. So maximum bars after opening, remember, is 2. I'm just going to change that to 5 because I saw that one instance there. And I'm just going to see how that affects our data. That's one change I've made. Why didn't it? 1, 2, 3. Five. What's the range? 98.6. Ooh, that was quite a bigger range actually. That was 40 ticks. Didn't realize. Wow. Okay. Now just check the performance. Has that made a difference? No, not at all. Okay. So we may have to adjust the range as well. You've got a bit open, widen that range as well. 2.85. Yeah, that's over 25 ticks as well. Okay. And again, there's some great straddles there, I think. Next thing for me is I don't want to overtrade on this particular strategy. We've got not many trades at the moment. I just want to adjust little things at a time to see if we can get some more trades, but keep that win rate really, really high. The next thing I've got to do now is play with the risk and look for there, because even that one here was 58 to, yeah. So the next thing I'm going to do is I'm going to double and then the risk size and work backwards. Yeah. So I'm going to put that at 50 ticks. Yeah. So bear with me on this, because this might actually throw a big spanner in the works, and it may be really, really awful, you know, but it might be good. So strategy and performance. So now we're on 10 trades, okay? Profit factor's gone down to 3.4, 3.14, which is still pretty good, actually. Actually 70% win rate is good. Profit factor of 3.14 is good. Max drawdown 748, that's not bad. But we're getting there. So let me export that a second. So I'm going to call this GC 10 min duration 2. Okay. So again, 10 trades now. One thing for me is this was a monster trade, okay, with a confirmation. What it did was just tip out one of those stops on that opening range. So, you know, adjusting those stops, we may be doing it a little too early. Yeah. So, for example, it went through from 63.4. So the top end one, okay, that's where I'm going to adjust. So remember, we did 3 pots. So we did 20, break even, 40, 10, 60, 30, right? So what I want to do now is, if we get runners, I would rather get the runner than take the smaller win. So what I want to do here is I want to put in probably 75, okay? So I'm still going to adjust it to 30, but it's got to go through 75 ticks first, okay? In fact, I'm going to put that at 25, 75, 25. And again, it's about adjusting to see what that behavior is. So when we get a runner, at some stage, there's always a little bit of profit taking, yeah? And that could dip, take your stop out, you take some profit, but it's not, you're not maximizing that. So what I want to do now is just apply that one change where I've messed with this stop loss trigger for number 3. Oops, didn't want to do that. I thought that was a fine one. Now look what happens. That was a monster trade, okay? So now we look at the strategy performance report. Again, it could have affected other trades, but no, profit factor is now 7.09. We've still had the 10 trades, but we've made $4,953 compared to $1,743, which I can see on the spreadsheet that we downloaded before. So we are starting to build a good picture for gold right now. Only 10 trades in 30 days, but I'd rather take $5,000 and only take 10 trades in 30 days than make $1,700. Max drawdown still 748. Okay, we're getting there. I'm just going to export that now. That is GC 10 min iteration 3. And save that. Now I need to do some more visuals. Back to the end. Okay, so have we missed any trades, or are some of the losers pretty pathetic? Okay.
Looks like the short trades is what's killing you.
Short trades were the losers.
That's where your max drawdown was the highest, and
yeah,
monthly losses.
But again, sometimes you have to weather that storm, because the longs can be pretty good. So this short was taken in on 1, 2, 3 on candle 4 here. Just make sure the previous day. No. So yeah. So again, because we've moved that from 2 candles to 5 candles, we have built in a loser here. Okay. Now, again, we can be quite pernickety here. That only ticked up probably 2 ticks and then came right back down again. Okay, so there are instances here where the high on this candle was 86.7. It's 4 ticks above the high. We need to see if there's another instance of this, of a short failure where a number of candles in, and see if it just tips us out again. So let's have a look for another failure. So this was a break even on the shorts. We got in on candle 2 this time. Now, this is interesting. So we got in at 66. That low was 58.2. That's why we were break even, because with this candle rejected, came back up and then pushed back down again. We've got that, remember, set at 20 ticks for that break even, I think, something like that. In reality, we couldn't have made much more there anyway. I think that's, we got to accept that it did its work there. I want to find another loser on a short if I can. Right, okay. Right, this is an instance where the optimization, the back testing, is actually a failure. This was a bigger winner. So we entered here. You see how the candle went all the way up here, back down again. But because it's on the same candle, it didn't adjust the stops as it normally would, okay? Because it's the back testing, and this is the only downside of Ninja Trader. If everything happens all on that one candle, it doesn't take into consideration that, because you can see the high of this candle here was what, 217.8, 221, okay, 40 ticks. We should be up here with our trailing stop, but it didn't happen because this first candle here was so volatile, it really upset the apple cart as far as the back testing was concerned, okay? So when you're doing your visuals here, you can actually put this one in the back of your mind in the bank that actually that wasn't a break even, that was a winner, yeah? So it doesn't happen very often, but you just need to be aware and spot those instances. I want to find another short loser if I can. If it's just the one, I'm reasonably happy, because in the same instance, some of the longs were big winners coming through there. So bear with me. I'm probably going to get a bit dizzy as I go through this quite quickly, but I just need to find another loser. Okay, so this loser was a long, okay. In at 95.7. The high was 97.3. Yeah, didn't really go enough to get to the break even there. But that high, 97.5, 18 ticks it went before it came back down again. Acceptable losses sometimes, because in the same instance like this one, it was a big winner. Why did that take profit there? Because it hit the target, okay? So what we want to do now is go to strategies, and I'm going to increase that target, okay? We know if we're on confirmation, it will, when it crosses, it will come down. So I think if we put that at, say, 200, okay, we double that, we click apply. Because you don't always, there we go, so you get more profit. So the idea is, this wasn't a continuation trade, because when we got the order, the blue was above the green on the EMAs, okay? But when we get a runner, we need a higher target. We know we're going to lock profit in at those points where we were adjusting that stop loss. So, you know, even if we went up here and it came right back down, we're going to make $250. But in reality, once we get a parabolic move like this, you know, this was 200 ticks. This take profit here, you know, this was a big trade, yeah. But you will get runners. You might get one a month, but you need to maximize that without going absolutely crazy. Let's have a look at the strategy performance report again. Okay, we've added an extra $1,000 profit there. Profit factor's gone up to 8.32. The max drawdown's still not gone down because we've got that short trade issue. But everything else looks pretty good. So I'm going to leave it where it is for now and export that. GC 10-min iteration 4. Okay, I'm good with that. Let's just go back. That's fine, it's break even, it didn't run. Try and find the loser. That short was fine. When you're skipping along, look at this P&L down here. You'll see when there's a trade. There we go. There's a loser there. Okay. So this is a continuation short. It wasn't the breakout short. So again, we've got one short that was the breakout and one that was a continuation. This was a small loss because we went down enough to get to break even. But again, here with the back testing, this is actually showing a bit of a loss, but in reality, we know that was at break even. Okay, so the market buy stop on the wrong side is that it has certain limitations. Again, when you're back testing, we know that was a break even. So that was not a loser. So this is where those shorts that we talked about were the weaker points. Actually, that was a break even, not a loss. But it's just the Ninja Trader occasionally just doesn't measure what we needed to measure. Again, we're going to work on a reversal strategy for that. That was a decent winner. That was confirmation. Okay. So I can't find another loser. No. So we only had 2 short losers. One of them was a break even. So I'm happy with doing that visual check there. So the next thing for me is max profits for the day. I'm going to play around with this a little bit. We can reduce those losses. I don't think the drawdowns are massive right now, but we can certainly have a go with that. But we're going to change one thing at a time. So when you're looking at max profit of the day, so if you do get a runner and you hit that $200 target, that's $2,000, right? Okay. So what you don't want to do is in the rest of the day, if you get a continuation trade and it doesn't go your way, you're going to give some back. So we're going to do the daily strategy profit amount. Okay. I'm going to do $2,000. Yeah. So if it hits $2,000, it will just not trade for the rest of the day. And that is protecting your profit. Yeah. Now, when we looked at those, average losses were about $300 or so. So what we can do at the moment, I'm just going to do that for now, then we're going to come back to max loss. So what I'm going to do is just look at the strategy performance report and just compare it to the previous one to see if that's made any difference whatsoever. Yes, it has. It's reduced the max profit and reduced there, but it's not reduced the max drawdown. So what we've done is taken profit off the table by doing that. Okay, you'll notice now, so this is the wrong way to go to begin with. So we're just going to find an instance where we've got max profit for the day. Where are we? Where are we? It's going to be blue somewhere. somewhere. There. Okay, so right at the beginning. So this took to the $2,000 actually was a much bigger trade. So what we did was restrict ourselves there. So again, by putting that max profit in, when we get a runner on with gold, it might be different on another one, on another instrument. When we've got that confirmation strategy, we've actually left half that profit off the table. So putting a max profit of $2,000 is not sufficient for this particular instrument when we get a runner like this, okay? So what I need to do is go back. He's got to think what you're going to be happy with as well. So I can see when we get a runner on confirmation, we make about $4,000, okay? So what I'm going to do is going to put $4,000 on that and just see where we are with the performance report. So I didn't save that performance report because that actually took me the wrong way. So I needed to adjust. That's better. Yeah. That actually is probably even better on the performance report. Yes. So before on iteration 4, we were 5,953. We are now 6,493. Okay. So this is a better optimization. So we, $4,000, 400 ticks. What boom, big trade. If that happens once a month, very happy. So I'm going to export that. GC 10 min iteration 5. Okay. So next thing, and probably the last thing I want to do on this is look for the max loss. We don't get many consecutive losers, so I'm going to put $350 on there. So max loss, again, daily strategy loss amount, minus 350. Yeah. Now, let's see how this affects the performance reports. Okay. What we want it to do is reduce that drawdown, but not reduce the profit so much. Because sometimes you can get tipped out of those at minus 350 and then it just continues to go the other way. So, okay, we didn't really reduce anything there, minus 350. So we can just check on the analysis here. 474 trade minus there. Why didn't you take that? All the rest, 443, 449. Okay. I need to find a red instance, like we've got the blue there. Okay. Did that help us at all? No, because it's the next day we've got the break even. So when we hit the max loss, it's red down at the bottom where you see the grey. See if there's another instance there where it actually did make any. Okay, I actually think we're pretty safe at leaving that at minus 350. Okay, we've got a $500 risk, not forget, on there. Let's just go back to strategies, just make sure I've got that right. Max loss, daily strategy loss amount, minus 350. Okay, we're good. We're actually good trading every day. We've got 10 trades in 30 days and it's $6,500 profit. So that's good. So what we've done is we spent an hour, guys, an hour just developing one strategy. Okay, so I'm going to stop that there. Okay, the the thing I'm going to do now is go to template. I'm going to save it. Okay, I'm going to put it as GC 10 min. What's the date today? The 15th of April, 23. Breakout and continuation. Yeah, B and C. Save that. I've saved it. Okay. Now, if you want to export that, okay, and you want to go into and share it with the group, for example, go into your documents folder, go to documents, go to NinjaTrader 8, go to templates, go to strategy, go to breakout, and you will see there GC 10 min 15th of April B and C. So I'm going to copy that and I'm going to put it in our WhatsApp group. Okay, so that is gold on the breakout and continuation. So for those guys in the apprenticeship, your homework this week, should you wish to accept it, is to look at the European Open for gold and optimize a strategy using the straddle trade, okay, for the European Open. Forget about the data reversal. I will put that together. So your homework this week is to go to gold, 10 minutes. You've got to have a different chart set. So we've got, you've got to open a new chart on the tab below, put gold up again, load up xBrat range breakout, and start from the default and work on a straddle only for the European Open. Okay, be quite strict with your rules so you can get, we've got a profit factor of 8.98 here, and we've got 10 trades in 30 days. Yeah, if you can get that European strategy open on the straddle to 5 or to between 5 and 10 trades, but very profitable, that all of a sudden gives us 20 trades in 30 days. Okay, trading at different times of the day, different types of strategies using the range breakout, 2 different chart sets. Does that make sense? Anybody got any questions? One thing, because I saved it as a template, it disabled the strategy. So be aware, if you want to re-enable it, you've got to click there and do that again. So any questions on your homework for next week? And when you have put it together, so the straddle is, it's actually in the boot camp, in one of the boot camp videos. I can't remember exactly where it is, but on the actual back end itself, when you go into strategies, so if I just disable that a second, you would have the opening trade disabled. You would have straddle trade enabled. Yeah, and you'd have continuation trade disabled. Okay, purely straddle. Okay, and the straddle is, it puts an order above and below. Okay, but it looked like from that visual inspection I was doing, there was more opportunities to trade the straddle type strategy around that European Open. So go back through. Yeah, so straddle only for homework, Vic. Yeah. So again,
Paul, I don't have a homework question, but I have another question when you're ready.
Yeah, go ahead.
So with the strategy reports you get after you run for X number of days and so forth, it seems that if you're going to, there's no, they're not taking into account any support and resistance and guardian zones and so forth like that, right?
No, the guardian zone is not built into this. So this is
Right.
with breakout on the auto strategy building. What you're looking at with breakouts is you've got that opening range and you're looking for a squeeze and a breakout of it, or it coming back through the range on the continuation and popping out the top or the bottom. So in a lot of instances, there are catalysts that will push you out of that range, and in a lot of times it will break short-term support resistance zones, because you've popped out of that opening range. Because remember, that opening range defined actually is your very short-term support and resistance. That's the furore of volatility and volume in that first instance where we found the high and the low. Usually, as you can see here, 70% of the time, when it breaks out well and goes for it and blitzes through those support and resistance zones.
Okay. Does that also apply? I know this is for range breakout, but I think it was Wednesday or Thursday, you had a good oil one on the roller coaster ticks. And I did not play, you saw on the WhatsApp.
Yeah, the roller coaster, I played that because it was a data play, and data wipes out all support resistance zones.
Okay.
It's almost like, think of data, a reaction to data, as a reset to support resistance. Because what it does is has that massive reaction, goes up or down, reverses, settles down, and then starts a whole new chain of support and resistance. Yes, you can still look at maybe 30 and 60-minute sort of zones that will be respected, but in reality, it's almost like a reset to those short-term support resistance, because you've had that massive reaction, then you've got the reaction to the reaction, and all of a sudden we've set a new path for that particular instrument.
Right, thank you.
Okay.
Hey, Paul, sorry I was late. Did you have any of those issues pop up for you when you got on?
I had no issues with my NinjaTrader at all, no.
Okay.
But again, caveat, new trading computer, downloaded and put the brand new version of NinjaTrader on. I didn't go through the upgrade process. Yeah.
Yeah.
If you're still having issues, I would uninstall NinjaTrader and put the new
that was my
version
first
on
thing
the
I did,
machine.
though. That was the first thing I did. I uninstalled it and reinstalled it, and the compilation issue still happened. So, I'm on my phone. My main home computer still running analysis right now, but I'll send screenshots.
Okay, brilliant. Thank you. Thanks, Nathan. Any more questions from anybody before I go and have dinner?
What's for dinner?
Oh, it's curry tonight, Indian.
That's my last question.